Towards the end of September 2018, I had alerted Prime Minister Modi and Finance Minister Jaitley about the sheer folly of dithering over the IL&FS crisis. I had written the fable of two faxes for them. Within 72 hours, the government acted, superseding IL&FS's complicit board, appointing private sector titans like Uday Kotak and Vineet Nair, among others. But it was a half measure, since it took lessons from only one fable, the one about Satyam. Satyam Computer Services Limited was a multi-billion-dollar company spanning 67 countries and 6 continents. On the 7th of January 2009, I remember it was a Wednesday, its founder, Ramalinga Raju, faxed a shocking confession to the stock exchanges. That read, the balance sheet carries as of September 30th, 2008, inflated, that's non-existent, cash and bank balances of over 1 billion, that's billion with a B, $1 billion. The gap in the balance sheet has been purely on account of inflated profits over a period of the last several years. I'm now prepared to subject myself to the laws of the land and face the consequences thereof. Now, that's what the fact said, but all hell broke loose. The Satyam stock tanked 78% and Indian markets fell over 7% before the stock was very swiftly removed from the Sensex. Broking firm CLSA called it India's Enron, an accounting fraud beyond imagination and an embarrassing and shocking episode in Indian corporate governance. But acting very, very quickly, to their credit, India's Company Law Board used its exigent powers to sack the entire board. The credibility of India's information technology sector should not be allowed to suffer. Saying this, the Manmohan Singh government appointed a couple of private sector professionals with unimpeachable integrity and global credibility. Therefore, in just 3 months, note that Satyam was sold to a joint venture of British Telecom and India's Mahindra Group at about 58 rupees per share. The Satyam stock then more than doubled after it was rechristened Mahindra Satyam. On that day, I think the government learnt a very critical lesson. That is, to not fiddle when Rome is burning. But the IL&FS crisis is across India's financial economy much more systemically lethal than a founder's fraud at one company. Right or wrong, IL&FS is seen to be a quasi-sovereign entity since it is owned and controlled by a clutch of public sector giants, including State Bank of India and Life Insurance Corporation. So this is not the time to argue about nuances around moral hazard, should we not. A $3 trillion economy, $3 trillion economy should not be held to ransom for a few $1 billion of liabilities. Allow me to reiterate the fable of the UTI fax, which Messrs. Modi and Jaitley have yet not taken cognizance of. Allow me to reiterate that fable. This fax popped up in Lutyens, Delhi on the evening of Saturday, that was the 30th of June 2001. It was an SOS about Unit Trust of India, UTI, which was a public sector mutual fund set up by an Act of Parliament in 1963, which then controlled, it was so large, it controlled an astonishing 8% of market capitalization. UTI's flagship scheme, US 64, had gone bust. Its net asset value severely eroded with negative reserves. Those days of late, UTI's fund managers had been colluding with rogue bull operator Ketan Parekh, who was of course later convicted for a massive stock market scam. Just by way of examples, US 64 was holding over 1 crore shares of HFCL, which had dropped from 2,553 rupees, 2,553 rupees all the way down to just 79. Here's another example. It had a huge stake in another company called Srivan Multitech, whose price had crashed from 450 rupees to as low as 8 rupees 15 paisa. But small unit holders were clueless. They just simply believed that their investments were safe. in the hands of the sovereign. So on Monday morning, after that Saturday evening fax, when US 64 investors learned that their life savings had vanished, all hell again broke loose. For nearly 1 year after that, then Finance Minister Jaswant Singh was caught in the crossfire. He was unable to make up his mind whether to bail out US 64 or to let it go belly up. Finally, of course, he was replaced by Jaswant Singh, who was clear that he had to put the might of the government behind UTI. And he then sanctioned a bailout package of 14,561 crores. That calmed the markets, and of course eventually UTI was privatized. So now coming back to the IL&FS saga one more time, let me reiterate that just the lessons from Satyam, i.e. Superseding the board, these are not enough. If the defaults don't stop, the contagion will be devastating, irrespective of whether you've installed a new board or not. Already the markets have wiped out over 10-12 lakh crores of investors' wealth. Even now, the credit economy could gum up completely. Remember, beleaguered public sector banks are staring at a direct exposure of 40,000 crore rupees in term debt given to IL&FS. Provident and pension stroke insurance funds have an additional 30,000 crore rupees at risk. NBFCs, mutual funds and others could be forced to write off the balance 20,000 crore rupees. So equally critical as the Satyam lessons are the lessons from UTI. That is, the government should have, in fact must, commit that it shall, and I repeat, shall backstop the 34,000 crore rupees that IL&FS has to pay from now until the end of the financial year in 31st of March 2019. The government obviously has a plethora of options to do that. Just one example could be a superior debt stroke equity instrument issued to National Infrastructure and Investment Fund to be repaid first before other creditors and investors once order is restored. So there are several such options the government can exercise. And after that, after the calm has been restored, the regulators can then begin the arduous process of systemically reforming and holding accountable everybody who messed up in this saga, from the founders, directors, ratings agencies, the very fragile apparatus of using short-term finance to fund long gestation infrastructure projects. Whatever is the reform that is needed should be done after calm has been restored. So ironically, Prime Minister Modi needs to take lessons from the very swift and decisive actions of two politicians he actually holds almost in disdain. That's former Prime Minister Manmohan Singh in the case of Satyam and former Finance Minister Jaswant Singh in the case of UTI. Such are the ironies of history.